Good morning, everyone. My name is Jeff Meisner. I'm the Senior Developer Marketing Manager at Avalara. Thank you for joining us this morning. We've got a great webinar for you on sales tax automation and our API and how developers should use it to automate tax. In the room, we've got a collection of tax experts and software engineers. Leading the discussion will be Wilhelm and Aaron Robles from our partner launch team, and then we also have India Anderson, Katina Montez, and Wayne Meyer. So I am going to hand it over to Mark.
All right, thank you, Jeff. So you are hearing Mark Wilhelm. I am Director of our partner launch team, so part of our business development group. So myself and my team help our partners as they're building integrations into the Avalara services, including what we'll talk about today, which is the AvaTax service. And specifically, we're going to go over sales tax automation, challenges in 2019 especially, and then how to develop and automate against that. Also, I'll be doing more of the functional part, discussing a little bit of the functional challenges that you're probably seeing in today's landscape. But the latter portion of the session will be a much more technical review of the API and how you can automate against our API, and that will be led by Aaron Robles. And I'll let Aaron introduce himself.
Thanks, Mark. My name is Aaron Robles. I've been with Avalara for just shy of 5 years now, and starting out in the support organization, I kind of learned the ropes by answering questions from all of our customers, regardless of what they had a question on, which kind of was the gauntlet that led me to being able to be in the role that I am now, which is primarily helping our partners insulate their platforms from the ever-changing world of sales tax.
Excellent. Thank you. Also, you'll get a little bit of an accounting bent from my portion. I am a recovering accountant. So in my earlier life, I was a controller, but have moved now into the tax automation space. So I'll be taking a look, and I always take a look at things from the accountant's perspective. You'll certainly get more of a technical engineering perspective from Aaron Robles, and as well as Wayne, that's in the audience here today. So we'll just start out, and we'll talk a little bit about, and you may have heard this mantra before, but it's just a tax rate by zip code. So if I'm shipping products somewhere, as long as I know a zip code and I know a tax rate, I'm good to go. That's all I need to do to calculate sales tax. So I'll just do that myself. How hard can it be? My accountant looks up the tax rates, and again, I have a special place in my heart for accountants. And most everything is taxable. So these are some of the common myths that are associated with sales tax and specifically automating sales tax. And my PowerPoint just died. So Aaron, do you have the PowerPoint? And
I do. Give me just a second.
I'll pause sharing there. Sorry about that.
Well, while they're pulling that up, this is Wayne Meyer on the developer relations team. The zip code issue, I'm guessing you're probably going to follow on with zip code and issues of using zip code. In developer relations, one of the problems we see many times a week is during testing, somebody has a zip code table and they're comparing the results that they're getting, and the results that they get from AvaTax differ. I've written a blog post on this recently that incorporated versus unincorporated jurisdictions, you can have locations in the same zip code just a couple hundred meters away from each other, even less, with entirely different zip code, entirely different rates, despite having the same zip code. And AvaTax will solve that one for you with an address and rooftop level accuracy.
So let's go on. So we'll start with some of the, as Wayne was just mentioning, sourcing the correct tax jurisdictions. That is probably the most difficult task when you're looking at trying to correctly calculate sales tax, especially whenever you're doing shipping across the U.S. Or even worldwide. So it is not just a tax rate by zip code. As Wayne said, there can be, even not only in a zip 5 area, but if the region that is covered by a zip +4 or the zip 9 postal code, even within there can be multiple differing tax rates depending on specifically where you land within that zip +4, zip 9 region. The other thing to keep in mind is intrastate. Am I shipping intrastate from one point in the state to another point in the same state, or am I doing interstate? The rules do change whenever you go over interstate, and there are differing rules whenever it's an intrastate. Intrastate especially is associated with, am I sourcing my tax jurisdiction based upon the destination address where I'm shipping product to? Or am I picking up the origin address, or is there some hybrid approach whenever I'm doing an intrastate shipment? Also, I have here Arizona weirdness. It's a variation of this destination origin hybrid. We'll talk a little bit about Arizona and the weirdness that they like to introduce into the sales tax arena. And then finally, if I'm looking at my destination address, the local sales tax always applies. County, city, or regional taxing authorities, should these always be applied? So first we'll start with, let's talk a little bit about intrastate versus interstate, sourcing the right jurisdiction. If I'm just using a zip code and I'm looking at the zip code at the destination address, that's only giving me one finite set piece of data. If I'm shipping interstate, now that is a destination-based calculation, meaning I'm going across the state boundary. Maybe I'm shipping from Illinois into California. If I'm shipping into California, then I'm going to look at the destination. However, then there is the question of, should I be using a sales tax rate or a seller use tax rate? Seller use tax rate, many individuals don't even know about that. In fact, until I joined Avalara and started learning about automation of transactional taxes, including sales tax. As an accountant, I had never even heard of seller's use tax. But there is a special tax rate that can be applied in certain scenarios that is known as seller's use versus sales tax. How do you make that decision if you're just using a zip code? And which of those rates should I apply? We'll talk a little bit more about that, but there is information that can be managed by the merchant or the seller within the Avalara service that will allow them to make that determination, so you're not guessing at whether I'm supposed to apply a sales tax rate or a seller use tax rate. Now, if I'm intrastate, shipping from one point to another point in the state, many states are destination-based, meaning if I'm shipping from, let's say, here I'm in Seattle and I'm shipping to Spokane. Here in Washington, I'm going to use the Spokane address to make the determination as to what is the appropriate tax rate. There are 10+ states that have an origin-based sourcing, meaning it's going to be looking at the origin point. And a good example is in Pennsylvania. If I'm shipping product from Pittsburgh to Philadelphia, I am to use the Pittsburgh tax rate for my product. However, if I'm providing a service, then I have to look at the destination address. So that is another component of why would you want to automate your sales tax and the sales tax determination and calculation. It's because these type of rules apply. And trying to manage that by a zip code or through a manual process is very difficult. And then if origin versus destination wasn't complicated enough, then we have certain states like California and Texas where I have a hybrid approach. And in California, a very good example is if I'm shipping from Los Angeles to an address in San Francisco, I'm going to use the origin address or the Los Angeles address to source my county tax. So Los Angeles county tax would apply even though I'm shipping it to San Francisco. However, any city taxes or regional taxes like transit taxes, stadium taxes, those taxes that are levied where the funds that are levied are earmarked for a special or unique purpose, like public transportation or a stadium initiative. And in California, there I'm going to base my city and regional taxes on my San Francisco address. And then in Texas, we actually have what we call, I think it's the Texas 12-step, which is there are 12 different iterations that our service has to go through to finally determine what are the correct tax jurisdictions to source. I know it's going to be Texas, but then what is my county tax? What is the city tax that applies? And what is, if any, regional or special taxes? All of this is solved through automating that through a service like Avalara or the Avatax solution.
Yeah, I'd like to add on with the Texas, something I ran into recently with a question, somebody doing testing for Texas. Tax included in Texas is a very hairy proposition. You have to thread some pretty narrow lines to do a tax included transaction in Texas. There's declarations and itemizations that you have to put forth to your customer ahead of time.
Yeah, there's a lot of very specific ways that you have to present that information on the invoice and then to the customer as a purchase order. Yeah, it gets pretty crazy pretty quickly.
Yeah. And of course, our bigger states, Texas, California, Illinois has some very unique rules. Arizona, we're going to talk about here in just a moment. But all of that, adding that complexity to the determination of not only what is the tax amount, but what are the correct taxes that I should be collecting. And then those are states, when you think about, especially California and Texas, there's going to be a lot of economic activity, sales activity that go on there. So having that complexity and having a majority potentially of a good portion of your sales being in those states really does put an onus on the seller to get the tax right. Now we'll talk a little bit about Arizona weirdness. So in the Avalara solution, and what Aaron will be showing us shortly, is we're going to take into account when the Avalara solution or the Avatax service is making a tax determination and calculation, you're typically going to be sending us an origin address. Where is this shipment of product originating from? And you're going to provide us a destination address. Where is my buyer located? Now, in most scenarios, that is sufficient to get the determination of sourcing the right tax jurisdictions and having Avalara and the Avatax service make that determination for you of is it origin versus destination, or is there some hybrid? When I get into Arizona, it is in an intrastate scenario, an origin-based state. And in that scenario, if I'm just shipping from, let's say, Tempe to Tucson, I'm going to source based upon Tempe. However, if I have an interstate transaction, which if you remember, I said earlier, typically in interstate transactions, or almost the typical rule is it's destination-based if I cross over a state line. In Arizona, that doesn't quite apply. It is not destination-based. However, if it is shipping from, let's say, somewhere in Illinois, let's say from Chicago, and it's coming into Phoenix, you would normally think it's interstate and I'm crossing a border, and so I'm going to base it upon the Phoenix address and pull in all of the tax jurisdictions associated with Phoenix. However, let's say that I do have a sales office in the city of Tucson. In that scenario, the state of Arizona has indicated because you have a physical presence and you have a place where orders may be taken, and I have a remote sales office in Tucson, regardless of where I ship from now, whether it be within the state or outside of the state, I need to use that Tucson address. In that scenario, first of all, you would think if I'm doing this manually, I'm probably never going to get that right because I'm going to base it upon a zip code, and then I'm just going to pull in whatever the rate is of where I'm shipping to. However, in Arizona, they're going to want you to source from that Tucson address. To solve that, and Aaron will be able to show this shortly, we're going to go through and you can send us a third address type, my origin address, identifying where I'm shipping from, and in my scenario, that would have been Chicago. My destination address, which is going to be in Phoenix. However, I'm going to also send a point of order acceptance address for my Tucson location, and in that scenario, having all three addresses in the array of information that Avalara or the Avatax service receives, we'll go through, make the appropriate determination, look at the sourcing rules that are specific to Arizona, and source from that Tucson address. So Arizona throws another wrench into it, and again, one of those states where we're seeing a lot of population expansion as well as additional economic activity. So Arizona now, again, if I'm using my zip code system to try to figure out how to calculate tax and make the correct determination, I'm not going to get that right.
Yeah, and in that scenario, let's say that this seller is in Illinois as well. Most of the time in Arizona, they'll be registered for either the sales or the seller's use rate. And what'll happen is if they get it wrong in this scenario and they're collecting the seller's use rate when transactions go from out of state into Arizona, they end up under collecting because typically the seller's use rate in Arizona is a diminished rate of just the state and then no counties. And so you'll end up in a scenario of like an audit risk because where you should have had a tax solution that was able to understand that the point of order acceptance was playing a key kind of variable in this scenario, if you're going based off of just zip codes, you end up under collecting in that kind of scenario, and that's a big risk.
And so we haven't even gotten to the actual calculation of tax yet. What we've talked about thus far is just trying to get to the right set of tax jurisdictions, state, county, city, or special or regional, to make the first element of what are the applicable tax jurisdictions. And local sales tax, do I always calculate the locals? Well, in most states, the answer is yes. State of Washington is a good example. Once you've registered for the state, any tax collected in Washington should include any county taxes, any city taxes, and any applicable special or regional taxes. And that's the case in many of the states. However, you'll see here I have a list of home rule or self-administered states. These 5 states, Alabama, Alaska, Arizona, Colorado, and Idaho, have very specific rules. And what they have done is the state taxing authority or the Department of Revenue in those states have indicated that the local jurisdictions, counties, cities, or these regional special taxing jurisdictions, they have the ability to break away and administer sales tax and the sales tax collection activity by themselves outside of the auspices of the Department of Revenue. And in those scenarios, the seller is required to register and register where they are required to collect. And in this scenario, now if I were using a zip code, and if you look at it, Alabama, there are over 840 local jurisdictions where I have the ability to opt in or to register. And until I register, I should not be collecting that tax because until I'm registered, I have no way to remit that tax. And one of the cardinal rules of sales tax, especially here in the United States, is any tax that you do collect, you must remit. That is something that the states will come after you for, and essentially, it's you're acting as an agent of the state without being registered as an agent of the state. So in these local jurisdictions, you can see I could have over 840 different unique selections of where I could be collecting. Within the Avalara solution, Avatax service, I have the ability as the seller to go in and identify where I have registered to collect. As these are added in, and these could be added in incrementally over time, as those are added in and the begin date of when I should be collecting tax there is reached, then the Avatax service will automatically start including those in the tax determination and sourcing routines. In Alaska, you'll see that I have over 100 plus. And in Alaska, it's even a little more unique because the state of Alaska does not have a state sales tax. However, there are 100+ locals that have taken it upon themselves to begin collecting and charging sales tax. Again, you'll want to have to register there before you start collecting. So we've talked about these things. It's not just a tax rate by zip code. Interstate versus interstate has an impact. The Avatax service has sourcing rules to make that determination, along with the destination, origin, and hybrid. And we even have ability to then pass additional address information, point of order acceptance that I mentioned, to get over the Arizona weirdness. And then we also allow the seller or the merchant to make the determination of, in those states like Alabama, like Colorado, like Idaho, which local sales taxes have I registered for and should be collecting and ultimately remitting. And in this case, this gets back to my asking your accountant to perform this data entry for taxes and to come up with a solution manually that meets all of this criteria just to source the right taxing jurisdictions is an onerous task, and one that they're not going to be able to have the time to do, nor even keep up and perform on a regular basis.
Mark, how do I know where to say, where to declare where I'm going to collect tax?
Well, it is, in most cases, traditionally it has been based upon where you have a physical location. I have, as I mentioned, a remote sales office in Tucson. I have to now register because I have a presence in Arizona. I could have a remote employee working in Birmingham, Alabama. And that remote employee there is the onus that I would have to collect that local tax. So traditionally, it has been where I have a physical presence. Now, in a little bit later in our presentation, we'll talk about Wayfair and Wayfair versus State of South Dakota, Supreme Court ruling that happened in 2018, and the impact that that's going to have on taxes as well. But again, going back to my point, asking your accountant to try to manage all of this, along with all of the other activities that accountant has to do, is a no-win proposition for either the company or the accountant, and ultimately the seller or the buyer, because ultimately the buyer is the one that is responsible for ensuring that taxes are appropriately collected. Now we'll go on to the second point. Now that we've talked about how do I determine where I should collect tax, and then sourcing the right tax jurisdictions whenever I'm making those sales, a consideration is, are my products taxable there? There is a misconception that typically products are taxable everywhere, especially if you think about clothing. How often have you gone into a store and not paid tax on a piece of footwear, on some apparel that you're buying? There are, however, single item price thresholds on clothing in particular. In New York, if I'm buying a single item that is priced under $110, that is considered to be a non-taxable event. Once I get to a single item that reaches the $110 threshold, or of course above and beyond that, then the full amount of that purchase becomes taxable. Now, in the local jurisdictions have the ability to also determine whether they follow that $110 threshold. In the city of New York, in Manhattan, if I'm making a sale there, the local jurisdictions, the city of New York and the regional transit authorities down there, they do abide by that $110 threshold. So if I'm shipping product into Manhattan and it is priced at $75, it's not going to have any sales tax. However, in Albany did not decide to follow that. And in that scenario, if I have a $75 item, the state tax is going to be considered non-taxable because it doesn't reach the $110 threshold. On the other hand, the Albany local taxes will be applicable because they have decided to not honor that $110 threshold and tax all clothing. Again, just having a zip code is not going to tell me that, and just saying it's an apparel, piece of shipped product is not going to tell me that if I'm manually maintaining my system. Massachusetts has a similar threshold. However, they make their single item apparel and footwear threshold at $175. The wrinkle they throw into it isn't once the single article of clothing or footwear reaches $175, the full amount does not become taxable, just the amount that exceeds that threshold. So if I'm selling and shipping to Boston a $178 pair of pants, only $3 of those are going to be taxable. So I can't just say everything is taxable, and not even in New York's case, some things may be taxable at the state or non-taxable at the state and taxable at the local. Again, having your accountant try to manage that manually is a no-win situation. Then we talk about sales tax holidays.
All right, I'm good.
In sales tax holidays, in 2019, as of today, there are 22 different unique sales tax holidays. These are periods of time, usually a few days, or even up to a week, where certain types of products become non-taxable. The states often do this to encourage the buyers to go out and make these purchases. They can range from anywhere from the Gulf states and the coast states where you'll see hurricane preparedness. And in fact, in February, I believe it's either Louisiana or Texas is having a hurricane preparedness sales tax holiday, meaning during a period of time, maybe it's the 22nd through the 25th, any of the items that are associated with hurricane preparedness. This could be plywood to put over your windows for the onset of a hurricane, batteries, flashlights, first aid kits, anything that is preparedness items become non-taxable during that period of time. If you're using an automated tax service like Avatax, once we know the item that's being shipped and we know that it's being shipped into to Louisiana, we can automatically apply the appropriate taxation of that during that period of time. Many states like to have back-to-school specials, meaning during a period of time in August typically, anything that is related to back-to-school, children's apparel, backpacks, even items such as laptops, if they're going to be used by a student, become non-taxable. Energy Star products. Many states, state of Maryland is going to have one this year, where Energy Star products are put on sales tax holiday to promote the sale of those to get more energy efficient products into the consumer's home. And then one that I find pretty unique is hunting supplies. Certain states, Louisiana is one of them, I think Texas may have one. They call that some of them call it a Second Amendment sales tax holiday. But leading up to different hunting seasons, the hunting supplies, guns, ammunition, apparel that's associated with the hunting profession or the hunting sportsmanship become non-taxable. Again, if you're going to ask your accountant to maintain all of that taxability, not only the clothing and apparel that we've talked about, but what about children's clothing whenever I have a back-to-school tax holiday? Am I prepared to manually maintain that? And then finally, shipping. The shipping associated along with the sale or the shipment of product. Many states, state of Washington is a perfect example. The taxability of the shipping is dependent on the taxability of the product being shipped. So if I'm shipping a taxable piece of apparel and I'm shipping that into Seattle, the associated shipping charge is going to be taxable. However, let's say I might be selling a food product like a gift basket that is determined to be food products, and food products in most cases are going to be non-taxable in Washington. That shipping charge then becomes non-taxable. And then I even have scenarios where maybe I'm asking to be, I'm shipping a table and I'm shipping some food supplies as well. There I'm going to have a blend because my shipping charge, a portion of that shipping charge is going to be allocated to the taxable table But then the food product that is non-taxable, there's going to be a component of that that is associated with that shipping charge that becomes non-taxable. Again, automating that and using Avalara APIs and our technology to give that information to the AvaTax service, allow it to make the determination based upon tax compliance rules, is going to be the best way to get accurate and efficient and compliant sales tax. And then finally, I'll wrap up with Wayfair versus the state of South Dakota. So up until this year, until 2018, Quill Corp versus the state of North Dakota, which was judiciated in 1992, came out with the physical presence test. And if you remember, Wayne and I chatted earlier about how is it that I determine where I should be collecting. It used to be based upon physical presence, and it was based upon if I have a physical location in another state outside of where my company is based, or a physical presence, and that physical presence could have even been inventory that I'm housing in California that I own, but it's in a rented facility. There is still a physical presence of property that I own inside the boundaries of the state of California, and the state of California would indicate you're now going to have to tax. Now, in 2008, what we found was Quill Corp versus North Dakota was overruled, and it was overruled by the Wayfair versus state of South Dakota. And in this case, in 2018, South Dakota took Wayfair to court and said, while you don't have a physical presence in my state, the amount of sales activity by shipping product from outside the state border into South Dakota inside the state border was creating a scenario where you should be collecting my taxes. And it finally reached the Supreme Court in June or July of this past year. And ultimately, the Supreme Court ruled in favor of South Dakota and said that is correct. And what they said as precedent now is physical presence test is overruled, and now I look at an economic nexus. An economic nexus translates into the total volume of sales. If I reach a certain threshold of sales on a state-by-state basis, once I exceed that threshold over the course of a year, then I am going to be compelled to register and collect tax within that state. And a good example of this, and I was recently back in January in New York City for the National Retail Federation Conference. And I had a jeweler come up to our Avalara booth in the expo hall, and he was explaining that I'm a jeweler, I sell high-end jewelry, I am based in Connecticut, but I get a very loyal following, and what I found is a lot of my prime customers that used to live in Connecticut have now moved to other states, moving south as they retire to Arizona, to California, to Florida. They still like to use me as their jeweler, and within 2 or 3 sales, because I am selling such high-end jewelry, that I can, within 2 or 3 sales, reach the economic nexus level for any of these states. And I have been in Connecticut all my life. I don't understand anything about sales tax outside of my state. I am now being compelled. And he was desperate for a solution for him so that his e-commerce solution will be able to collect and calculate the appropriate tax in states that he has had no experience in before. So it all leads to how do we automate this, and what is the best way to get this information into a service and dynamically get a valid and compliant tax calculation back. And with that, I'll let Aaron move the slides and let Aaron take over and now talk about, from a technology perspective, along with Wayne here and the others in the room, how is it that we can use automation and technology to solve this problem?
Thanks, Mark. So, as Mark alluded to earlier, the AvaTax approach to solving this problem is through technology and automation, because at the end of the day, this is the stuff that businesses don't want to spend time doing. If you own a business, you want to spend your time growing your business, figuring out what the next step is, and just doing what you love. You don't want to spend time trying to also stay compliant. And oftentimes, whether it be financially or just time constraint wise, business owners can't afford to spend time on trying to stay compliant. So from a technology perspective, we've kind of structured our stack in a manner that we offer a variety of different SDKs that you can consume depending on what language you're using or what platform you're transacting through. And through making use of the Avatax SDK and our REST API and mapping your transactional activity to what we call create transaction API requests, you can insulate your platform. If you're a partner, you can insulate your merchants and your customers, and you can insulate just overall your business and your livelihood from the perils of a tax regime and environment that's constantly changing. So the sourcing issue that Mark alluded to earlier, trying to figure out what kind of tax rates that you should apply, trying to figure out what kind of sourcing applies to the transaction itself. A lot of that can be handled in the payload that you send to Avatax when you create a transaction after integrating with the SDK. So you can see here that we've defined in the address array a ship from address and a ship to address. Those two pieces of information is all it takes to connect to Avatax after defining Nexus within our user interface for Avatax to be able to determine, alongside the other things that you see in this payload, exactly what the taxability is, what the sourcing is, and what rates should apply to any given transaction. So in this instance here, we understand that because it's shipping from Washington State and it's shipping into New York State, and it's a piece of clothing that's over $150, that we will calculate that tax appropriately. And I just touched on the idea of managing the sourcing from within our user interface. So hand in hand with the API and being able to integrate your platform to our stack comes the ability to have access to our user interface. From there, you're actually able to define where you need to collect tax and what kind of tax you're registered to collect. So as you can see in our interface here, you can choose whether you're collecting in California or not collecting in California. In states like Alabama, with that 840 list of local jurisdictions that are opt-in or opt-out, you can drill in and select whether you need to calculate tax there. In states like Missouri, where there's what's called a vendor use versus a sales tax, depending on what kind of tax you're registered for, you can define that in our user interface for the engine to be able to understand which rates apply to your transactions. So we can handle all of that. We can also handle the fact that a lot of times you only need to collect in like 2 states. So you don't have to apply like 0 rates or 0 taxes to a bunch of things manually. Rather, we understand from the outset, after configuring your interface for your account, that you only need to collect tax, in this case, California and Louisiana. And so we'll understand that no tax is due in your particular business scenario for anything outside of the scope of those 2 states.
Not only that, recently we had Nexus threshold notifications go live in the UI. Aaron, you want to speak to that a little more? Or?
Yeah.
This is a pretty exciting feature of Avatax. I want to make sure this gets on people's radar here.
I think I'll zoom over to that slide actually. I'll go back to the product taxability one, because that's a really good point. That's a very, very exciting feature that we've added to Avatax, because at the end of the day, our value to our customers and our partners is that we want to be an end-to-end compliant solution. There are maybe some people or some organizations that can calculate, or maybe they can help you file a return after somebody else calculated, but we want to be there end-to-end and basically say, we've got you regardless of what you're trying to do. End-to-end compliant solution. And what that means is that in a post-Wayfair world, you're going to end up running into scenarios where you need the ability on the fly as a business owner to keep track of how much business you're doing and where, because more and more of these states are enacting this kind of legislation and this approach where even if you don't have a single person in that given state, and even if you don't have a physical presence in that state, like Mark said earlier, if you do enough sales into a given state, you're going to need to start collecting tax there and remitting it. And in some of these states like Texas and California that are kind of weighing that option and are, coming closer and closer to making that kind of decision, it's extremely easy in an e-commerce scenario to find yourself suddenly over that threshold because there's just a lot of people out there buying a lot of stuff, which is great until suddenly you are being audited and you didn't do it right by the standards of either the Board of Equalization in California or the Department of Revenue in the case of Texas. So after you sign up with Avatax and you're able to use our platform, we aggregate all of the transactional data that you're sending into our service, all of the calculations that we're doing for you. We'll aggregate it and then we'll show you in this, I have an image here on the right, in kind of like a heat map, where you're at in each jurisdiction that has economic thresholds, how close you are to hitting that threshold, and based off of just some analytics on the transactional data that you've been having with us since you signed up with us, we'll be able to tell you our best estimate on when we think you'll hit that threshold. Once you can see on here, I'm coming up on hitting that threshold, that's not necessarily where our value to you as a customer stops. We can actually give you some options to take action on what you see here on your screen of like, well, I'm 90% there to having economic nexus in Alabama. I'm not registered there. Like, what am I going to do? Well, we have services and we have partnerships with service providers that will actually get you registered in that state. Furthermore, if you're in Alabama and you're coming up on that threshold, but you don't have any physical presence or any salespeople there, you actually are going to be collecting a whole different kind of tax. Alabama has instated what they called, the acronym is SSUT, I believe. I forget the full meaning of the acronym. But the idea is that if you get registered, if you qualify for SSUT in Alabama, you register as an SSUT merchant with the state of Alabama, and then instead of collecting all of those locals, you're collecting a flat 8% at the state level, and you're remitting directly to Alabama on a completely different form specific to SSUT.
Simplified seller's use tax.
Clearly not that simple.
Simple, it's 8% into the state.
Yeah, 8%.
So for a person trying to calculate that, they've actually made it much easier.
Mm-hmm.
Unless you have taxable or non-taxable products.
Or you don't, or you get registered for that, and then because you don't know any better, you file it on the wrong form because like most people file a completely different form. So like that's kind of the value that you're going to get from Avalara, is that we'll be able to show you where you're about to need to get registered depending on how much business you're doing in any given jurisdiction or state that has these legislations in place. We'll be able to offer assistance with getting your business registered in those states, and then after we get you registered there, after we help you get that compliance piece in place, we can then automatically start filing those returns on your behalf. So yeah, I mean, that's a really good call out, Wayne. This is a huge, huge boon to what we're able to offer businesses to help them figure out how to navigate all of this stuff, because it's changing really quickly. And there's I talk to a lot of partners whose customer base just like are in a tizzy. They don't know what to do, and they don't want to get audited, and they feel like their livelihood is threatened. And this is a really, really great tool that can help kind of alleviate that anxiety, because, a technology company can have your back. End of story, end to end. I'm going to zoom back to the product taxability slide. Same payload, same exact amount of information, but a whole other side of the story that we can help with. In this scenario, you can see here that I've got a tax code for clothing, and then I've got a tax code for shipping. And because you set that up when you implemented Avatax, we understand that actually shipping, because you've marked shipping up for a profit, it's taxable, even though normally it's not taxable. Actually, because that clothing is over $110, it's taxable, even though you thought maybe it wasn't because you heard someone say it's typically not taxable in New York. So there's a lot of value that you can get out of the Avatax engine and our solution just based off of the data that you can send us. That's kind of where the magic lives. And then, of course, as I alluded to earlier, there are SDKs that can help expedite the build and the development of any integration into Avatax. I won't spend too much time on it, but what I will say is that I work with a lot of partners. Wayne works with a lot of API customers, and I think everyone in this room will agree that the ones that make use of our SDKs versus the ones that don't have a far easier time and efficient time integrating their platform into our solution.
The developer relations team builds and maintains those SDKs. They're open source. You can get the source code. They're under an Apache license. Feel free to extend them, warp them to your end. But they include a lot of features that developers who are writing a from-scratch integration often run into in minor issues, especially if this is their first time integrating with a web-based API. The SDKs simplify all of that, including in some of our SDKs, retry logic, fallback logic, synchronous and asynchronous methods. I could really run down the rabbit hole of technology here of what the SDKs do for you, but check them out yourself and or reach out to the developer relations team at Avalara. We'd love to talk about this stuff with you.
I mean, that's a good point. Like, at the end of the day, there's a lot of resources at Avalara for developers between your team. If you're building a repeatable integration and you want to partner with us, our team, the documentation, you can try it out. You can try it out in the user interface on the website, as well as getting a free trial sandbox to just, hit the API with anything that you can think of, work on it. There's a lot.
Did you call out our demo page?
Yeah, the demo page. You can try it. If you go to that first link on the slide, you can actually demo the API through a UI without having to know even really what you're doing. It's just click, click, boom. You see the request, you see the response, and you can immediately see the value that we offer in a visual manner. And with that, I think we should probably open it up for questions.
Can you go back one slide here?
Yeah.
Yeah, great. Okay, everyone, this is Jeff Meisner again. So just want to point out a couple of resources here. Please do take this time also to put any questions you might have in a chat box or raise your hand and we'll get them answered as best we can. As referenced earlier, we do have a really cool, slick API demo experience that anyone can use. I believe it will give both a request and response in multiple languages, so it's got a lot of really cool features. If you've heard enough, or if you're far enough kind of down the line of building your tax integration and you think Avalara is something you want to explore more, then I highly encourage you to sign up for a 60-day free trial. You get a production account, unlimited API calls. It's a really superb offer. And then also I want to make sure everyone here on the phone is aware that we have a great annual tax compliance conference called Crush. It'll be in Huntington Beach, California, this year in May, from May 8th to 10th, I believe. And there's a dedicated developer track there, and we'll have some really great experts there leading a number of sessions dedicated just for developers learning more about tax compliance and having a voice in how our technology gets built in the future. So any closing thoughts? I'm not seeing any questions. I'll give folks a couple more minutes to ask questions. If anyone wants to go around with final thoughts before we end the call, then now's the time.
Well, I'd just say I'll harp on the accountants and advocate for my fellow accountants. Trying to do this through an automation really solves a lot of their problems. It also allows them to focus on activities that are value add, as opposed to just compliance activities, just trying to get taxes right, spending a significant amount of time. The value is basically risk mitigation. So risk mitigation is something that you can automate and then allow the accountant to focus on value add for the company is a win both for the accountant and for the company.
Yeah, I like to think that we kind of open up we open up the possibility for them to spend their energy kind of swimming forward as opposed to just treading water.
I'm curious what a recovering accountant looks like. I mean, other than you, Mark.
Well, you still always get the bill at dinner to split up between the folks that are there. So you're always in accountant's mode, and I'm always trying to put the general ledger puzzle together. So those things don't go away. I just don't have to do a monthly month-end close and financial statements each month. So that's what a recovering accountant feels like.
Okay, folks, so one other quick announcement. We do have another webinar coming up for developers on February 19th that will be focusing on e-commerce shopping carts and making sure that they have the 6 or 7 essential features needed to make sure that those things are able to automate tax. And then I just want to encourage everyone to also follow us on our Twitter channel. It's @Avadev. And that is it. Thank you, Mark, Aaron, India, Wayne, and Katina, and to all those who joined us. I'll be posting a recording of this on our developer YouTube channel in the next day or two, so you can catch it if you need it for review or anything like that. Thanks, everyone. Bye-bye.